Hey, hi everyone. Welcome to today's webinar on MTD for income tax, what you used to know but have long since forgotten. My name's Dean Shepherd. I thought we'd have this kind of refresher webinar really today on MTD for income tax because, of course, it's been with us, or the prospect of MTD for income tax has been with us for quite some time, all the way back in 2015 it was first announced, but each time there's a delay to the rollout or the go live date, then I think we start to switch off a little bit to what's happening with making tax digital, and then rekindle that kind of interest in what needs to happen for your practice and your clients as we get closer and closer to the next go live date, and hopefully we'll see this forthcoming go live date of April 23 stick and finally see this project rolled out. So what can you expect from today? Making tax digital, why? I'm not sure I can really explain why. Maybe we'll just take 30 seconds of silence to meditate and think why on earth are we doing this, for putting ourselves and our clients through this. We look at who's in and who's out, particularly from that first tranche in April 23. Dates, deadlines, penalties, record keeping, digital links, they're always an interesting topic of conversation. Actually breaking down what making tax digital is from a process perspective, so looking at quarterly reporting. I think that's the key requirement that everyone kind of latches onto because that's the new bit, but there's the end of year step as well, the finalization or crystallization, and there's a couple of different steps in there. So how's that going to work? And I'm sure we can cover off what technology will be available or is already available to help you and your clients navigate your way through making tax digital. And we're going to do it in the form of Q&A or question and answer style. I want this to be as interactive a session as possible. We've got a huge number of people logged onto this call, so I don't just want to kind of sit here and just speak at you for an hour and just go through slide after slide after slide. I'd be really keen to make sure that all the questions, anything you're unsure of about making tax digital for income tax, this is your opportunity to bring those questions to the front, and hopefully I can answer those, or at least give you my opinion on them if I'm not able to give you a definitive answer. So with that in mind, I will encourage you to use the Q&A panel. I've got that permanently open on my screen, so anytime you put a question forward, I'll keep my eye on that and try and bring that into the conversation and get those questions answered for you. There is also a chat facility which you are very welcome to use to chat, comment, talk amongst yourselves. I won't be keeping an eye on that one, so if it is a question you want me to answer or that you want to bring up for discussion, then put that in the Q&A. If it's a question you've got for anybody else on the call that you want to have a conversation amongst yourselves, then use the chat for that one. So before we crack on with the questions, we did have a lot of questions submitted in advance, so I'll be referring to those as well. But please, anytime you've got any questions, put them in the Q&A panel. But before we get cracking with those, a little recap of making tax digital for income tax and what the key tenets of it are that you'll have to prepare for your practice and your clients. So this is taken from HMRC's original presentation, or I should say David Gawk's presentation as Financial Secretary to the Treasury shortly after George Osborne made the announcement in 2015 of making tax easier. That was the original name of the programme, and spelled the end of the tax return. It wasn't too long after that presentation that it was felt making tax easier either was HMRC building a bit of a rod for their own backs, or the realization that there was nothing being suggested in this program that would actually make tax easier for anybody, but it certainly would make tax, or at least business processes, digital. So I don't think it was a bad decision on their part to quickly get rid of that making tax easier and turn it into making tax digital. So HMRC's vision, this is currently their vision, it's their ambition to become one of the most digitally advanced tax administrations in the world. Absolutely have no problem with that. I think it's a great ambition to have. They want to modernize the tax system to be more effective, more efficient, and easier for customers to get right. I don't think any of us would be offended by having a more effective service and more efficient service from HMRC. Working for a global organization such as Wolters Kluwer, it does give us some insight into other tax administrations around the world. I do monitor what software solutions we have in other territories overseas, how they work, if there's any ideas or functionality or technology we can grab and bring into our solutions in the UK. And I think there are a number of administrations, both within Europe and further afield, that are really a few steps ahead of HMRC in terms of becoming digitally advanced. And personally, probably a little bit disappointed that HMRC haven't followed the approach of some of those administrations overseas and picked on areas to digitalise that are a bit simpler first, get those right, rather than diving straight into small businesses, property landlords, and the complications that will inevitably bring. But we are where we are. So why do we have Making Tax digital at all from HMRC's perspective? Well, they say that a digital future is what most customers expect. I wouldn't disagree with that. Helping businesses get it right first time will reduce tax lost through error. In the technology business, we would call that an assumption, an unproved assumption. I think it's been highly criticised, the impact on the tax gap that Making Tax digital will bring, but that has always been a key argument from government and HMRC to support this very costly project, has to be said, getting through the fact that that tax gap will be reduced. I think to the tune of 1.3 billion was suggested just on the digitalisation and the quarterly reporting of transactions. And accounting software can help to integrate tax into business processes and financial planning. Absolutely. Quite what business that is of HMRC's is, I'm not too sure, but I think we can all agree on what the benefits are of using accounting software for businesses for the right business. They also produced a couple of stats that I found quite interesting, and these are all before, incidentally, before MTD for VAT was made mandatory in April 2019. The statement that 2 million small businesses already use accounting or filing software, that was very interesting for a couple of reasons. Firstly, if there's 2 million businesses already keeping records digitally, then are we really going to see this big reduction in the tax gap by persuading however many are left to start doing so? I'm not so sure. And there are also 12 million or more income tax returns filed annually every year. So 2 million, although it may sound a reasonable figure, is a somewhat small proportion of that total 12 million tax returns. And the tax completed online stats are also quite interesting. So that 89% of income tax returns are already filed digitally or electronically, either through third-party software products or directly through HMRC's website. I think around half of all tax returns, maybe just under half, are filed using HMRC's website service, which they are not going to be producing the equivalent of when Making Tax digital goes live. 98% of corporation tax returns are filed digitally. It is a requirement except for exceptional circumstances, and 99% of VAT returns were already submitted digitally before MTD for VAT was made mandatory in April 2019. I actually think that percentage has dropped since Making Tax digital went mandatory for VAT, which wasn't a great outcome for something professing to make the businesses more digital. So what does this mean for income tax? What are the core requirements? What are the big differences that are going to happen for your clients and ultimately in how you support them? That first one is probably the primary issue here, the requirement to capture transactions digitally in record keeping software as near to real time as possible. I wouldn't place too much weight on that as near to real time as possible. My interpretation is insufficient time to be able to meet the reporting requirements, which is quarterly. But capturing those transactions digitally, a couple of important points here. It is just the transactions, that transactional data that's being captured digitally. It doesn't mean you have to digitalize all the paperwork that sits behind it. So if you have clients that are still quite happily keeping paper copies of all invoices, statements, whatever it might be, it isn't part of the requirement to make those digital, not the whole bookkeeping records, just to capture the transactions. So the clients that will be affected most are those that are still using manual paper cash books for recording the transactions, or those not undertaking any formal transaction recording, which is less likely for businesses, but certainly likely for property landlords who may not month by month, quarter by quarter be actually doing any kind of bookkeeping right now, whereas that will be a requirement once MTD goes live. Second requirement is to interact with HMRC using MTD compatible software, or functional compatible software as they sometimes refer to it. Really the point here is that any software that's used to communicate with HMRC has to be approved by HMRC and go through that process. So as a software supplier that's worked with HMRC for a long time with all our existing products, that's a natural process for us to continue with. But it can be somewhat of a barrier to entry for new software or for new technology to come on board and quickly come out with innovative solutions that you and your clients can use. HMRC won't allow you to connect to their systems unless it's approved, and you won't be able to file MTD returns at all without approved software. It also means that it just reiterates that point that HMRC won't be building their own functionality as things stand today. The government did make a commitment that there should be free software solutions in the market for the simplest of cases. I know of at least 2 software products that are currently working with HMRC and have clients in a live trial that will be free for the simpler cases. But of course, no commercial software business is just going to endlessly make software for free. There will be premium elements to any such solutions, which somewhat goes against, I think, the grain of what the government wanted, i.e. a replacement for what we have today, which is any taxpayer pretty much can file their own tax return through HMRC's website if they choose to do so. Quarterly updates and end of year process. So I think from the outset of this concept of having quarterly updates, quarterly returns, quarterly submissions, that's the primary change. I think people are very much aware of the need to suddenly start filing information quarterly rather than annually, and that's certainly going to be the biggest change. But there also is an end of year process that accompanies that. Lots of people refer to it as the 5th period or the 5th return. So we've got this notion that we're going from 1 annual tax return to 5 submissions or returns. In my mind, if you can get away with five returns in this process, then you're doing very well. It could certainly be a lot more than that. No more self-assessment return. That was the big announcement from George Osborne. This will spell the end to the tax return. We'll no longer need tax returns. HMRC will be the source of all this data that will flow into them, and no longer will individuals have to report annually on information that HMRC already hold. I mean, it's an interesting notion for someone that's never worked in the industry to think that that's a viable concept. In my mind, I mean, you can call this end of year submission, finalization, crystallization, call it what you like. To me, it's a self-assessment tax return. In today's world, the physical paper tax return, or the PDF equivalent that I'm sure most of you will use in the software that you use today, that will disappear. There will be no SA 100 and supplementary pages. That gives us software developers carte blanche, if you like, to present that data to you and your clients however we see fit. And to be honest, I'm sure we can present that data in a much more comprehensive and understandable way than the traditional tax return. But the actual filing process, what you're doing, you're still making a self-assessment. I've noticed in a lot of literature coming out of HMRC that they've started to use MTD for income tax a lot less, and making sure that they state MTD for income tax self-assessment, just to address that point that it's there's no change to the concept of a self-assessment. It's still the individual declaring what their state of affairs are for the year, and then it's for HMRC to challenge that if they think there's something wrong. As far as I'm concerned, that there absolutely is still a self-assessment tax return at the end of the year. When we submit a tax return today to HMRC, we don't actually submit that PDF. We have a digital equivalent that submits the data contained within it. That's going to be exactly the same under MTD. It's a different technology and a different mechanism, but essentially we are submitting digitally exactly the same information at the end of year that we always have done. So to me, the tax return is very much alive. And the final point there, same deadlines for finalising tax affairs and making payment. So ultimately, the 31st of January deadline is going to stay as is. That will be the same deadline for the finalisation or crystallisation when MTD goes live, and the payment deadlines are going to remain the same as well, the January and July payments. There's no planned changes to those. We will absolutely see HMRC encouraging individuals to make voluntary payments on account. HMRC are a little bit more excited than I am about their predictive tax calculation. So each time you file a quarterly set of information, HMRC will provide what it believes your tax liability at the end of the year is likely to be, and they'll be encouraging individuals to make payments on account towards that, or at least make sure they've got sufficient funds set aside. Again, I love the idea. I don't necessarily like the execution. I think given the amount of data HMRC has within their database, if you think even if we're just going back to the inception of self-assessment in 96.7, that's a huge amount of data they've amassed to this point on every different type of trade, business, in whatever stage it might be. I would love the idea of data scientists analysing that to come up with a real accurate prediction of what the tax liability might be that gets a little bit more accurate each quarter you submit. Unfortunately, that's not really how it's going to work. They're simply going to multiply out. If you submitted one quarter, they'll multiply it by 4 and use today's tax calculation to tell you what the tax liability would be there, which for all but the simplest of businesses with the best records, I think if the net profit figure comes out and matches the net profit figure once you've gone through and done all your annual adjustments, capital allowances, losses, add backs, accruals, prepayments, if that comes out the same profit figure, then that is purely by chance rather than any great algorithm used by HMRC in that predictive tax calculation. But that's the direction that they're heading on that one. Okay, so let's have a look at some of the questions that have come in live. So I want to make sure that we can answer as many, if not all, the questions that we can. Okay, so I can't work out how real-time reporting works for a client whose year end is usually 30th of April, and they have to report real timely figures every quarter, i.e. by end of July 23, they report April to June, but then their final submission is based on April 2022. Okay, probably lots of interesting topics to cover in this one. So 30th April year ends, you've got to love them, right? They were super popular when I started out in practice, right at the inception of self-assessment, and I must admit I was quite into the idea of using 30th of April and effectively deferring your tax. It's super useful if you've got a business that's growing in profits, because you're always kind of a bit behind and you're paying tax on profits that you made a few years ago rather than the real profitability of your business. Not quite so well when things work the opposite way around and your business is winding down or ceasing. But yes, I guess 30th April year ends is still very common. So how's it going to work? Well, let's cover off a few things. So if we're thinking about when this is going to start, so it's going to start in April 23, and that is from your first accounting period that commences on or after 6th of April 23. So in this scenario, we've got a 30th of April year end, which means the start of the accounting period will be 1st of May, and the first accounting period to start on or after 6th of April 23 is going to start on 1st of April 23. So the first accounting period caught under MTD for this client will be to 30th of April 24, which will form part of the 24-25 tax year. Okay, so this particular client would be in MTD quite early from the outset, from April 23. So the quarterly updates will be submitted, but absolutely at the same time, that client is still under what we call internally legacy self-assessment, today's self-assessment system, because yes, they're reporting quarterly, and when we get to the 24-25 year end, you'll be filing that tax return under the new MTD process, the finalization, the crystallization, but you've still got a couple of tax returns to go, right? So there is going to be a bit of overlap. I think the important thing to remember is that an individual cannot be filing both a legacy self-assessment return and an MTD tax return within the same tax year. Okay, so you might be filing quarterly updates concurrently, but one tax year is either legacy self-assessment, and one tax year, the next tax year could be MTD self-assessment. You can't have a combination of both. Okay, how would we know which, this is a good one, how would we know which client should come under MTD without knowing the turnover which has been dropped due to COVID-19? Terrible timing, right? Okay, so I think we're probably all aware of the threshold for MTD. It's £10,000 revenue threshold. So if your turnover, combined turnover from any business or property that you have exceeds £10,000, then you are going to fall under MTD. Now, to determine that figure, you look at 2 years prior to the tax year in question. So if the first MTD tax year in question is 23-24, so it's going to start in April 23. Remember, you have to look at your financial year end here. So this would be for 5th of April year ends only, caught in that first tax year, 23-24. You need to look back 2 years and see what the revenue was in that year. So actually the current tax year that we are in, starting just back in 6th of April, 21-22, that is the pertinent year for all of your clients that have land and property, because they're all 5th of April year ends. Any self-employed businesses that you have with 5th of April year ends, any partnerships you have with 5th of April year ends, the current tax year, 6th of April 21 to 5th of April 22, that is the year where you are going to look at the turnover at the end of the year. If it's above 10,000, then you are in MTD from April 23. If you are below, you're out. You always look back 2 years. So it doesn't matter if that happened to be a particularly good year and then your revenue drops, you still have to stay within MTD effectively for an extra 2 years until you come below that 10,000 threshold. Similarly, if you've got a new business starting up, if you don't have that particular source of income 2 years prior, then it's treated as being nil for the £10,000 threshold. So new businesses will come into the legacy self-assessment to begin with, and then 2 years down the line will go into MTD. MTD is always optional, it's always voluntary. You could actually enter MTD now under HMRC's pilot scheme, and if you do at some point in the future your turnover drops below the 10,000 and you have the option to come out. You don't have to come out. You can just carry on staying within MTD. And I think probably once things have leveled out a bit and everybody's got systems in place and everyone's got a bit better understanding, I think once you've been handling a client in MTD, then that you'll just potentially continue doing so. But that was a very good question. Can you please ask Dave? Can you please ask HMRC to defer the introduction of MTD indefinitely, as this is going to be a nightmare to process? I think it's fair to say I haven't been backward in coming forward about my opinion of HMRC introducing MTD, and we do spend a lot of time working with HMRC. We have weekly calls with them as a large software supplier, as well as multiple workshops on the practicalities of MTD, and indeed lots of our large practice customers are on those calls as well, and they certainly make it clear how they don't have the confidence that this is going to achieve what HMRC expect it to achieve. I'm a little bit, as much as I'm not a fan of it, I'm a little bit ambivalent. You know, if every year we have changes that are thrust upon us that we have to handle and deal with. Typically our first reaction is what a ridiculous idea by the Chancellor. Why on earth are they putting through this for no obvious gain? And you know, we deal with it and crack on with it. MTD is obviously a big one, but I'm kind of feeling like the same. It's gonna come eventually. I would rather it was a little bit better thought out, but you know what, if it's inevitable, let's just crack on and get in there and iron out the wrinkles. You know, I don't think anybody can really call the introduction of MTD for VAT a resounding success, but you know, we're 2 years on now from mandation, and it is what it is. We coped, we moved on. I think the same will happen with MTD. If we can look for opportunities to build and grow your practice and establish better, closer relationships with clients as a result of having to do more work for them quarterly rather than once a year, then there are positives in there. You just have to search really hard for them. I've got a client who receives substantial rental income abroad from a family company, and also have rental income from a block of apartments together, a number of family members prepared by overseas accountants. How does this work with its MTD? Okay, again, lots of interesting aspects of MTD to cover with this question. So I kind of mentioned it earlier, right? If by being within MTD, all you have to do is 5 returns rather than 1, you're doing pretty well. And the reason for this is that, firstly, when you're reporting quarterly, right now, the only income that you have to report quarterly is business income, and that includes unincorporated business income and property income. So if you're a UK resident individual and you've got to report those, one or other or both of those income types, then you will be doing so quarterly. Any other types of income, it's only voluntary to submit that quarterly. As a software supplier, we've had no one say to us, oh, we'd really love to go over and above the minimum requirement for MTD and actually submit all our clients' employment, bank interest, dividends, all that kind of information quarterly as well. I think until we get the knock on the door for that request, then we probably won't even give the facility to. We want to make sure you're covered for the requirement, not anyone wanting to deliver over and above. But once you're in, you have to do a quarterly submission for each type of business and each type of property. So if you have more than one self-employed business, or as well as being self-employed, you are also a partner in a partnership, then you are making separate quarterly submissions for each one of those entity types, if you like. So 2 self-employments means 8 quarterly submissions across a year. 2 self-employments in a partnership means 12 quarterly submissions throughout the year. Property gets even more exciting because you submit per property collection of property types. So if all your property is ordinary UK property, let's say you've got 4 or 5 properties in your portfolio, you amalgamate the income and expense figures and make one submission for the combined total. If you have a property that you're claiming rent or room relief, that is a separate submission. So you've got 4 submissions there. If you've got a property or properties that qualify for furnished holiday lets, that's a separate set of submissions for those. If you've got overseas properties, that's a separate set of submissions. So a very long-windedly covered the question about what happens if you've got multiple properties and they're overseas, how are they affected? Yes, you will need to report if it's a UK resident individual, but depending on the type of property, it may not just be 4, it may be many more. Now, I'm sure I could come up with lots of weird and wonderful examples of how you can end up with 52 quarterly submissions for a single client, which I won't do today, but it doesn't have to be a super complex situation to have you end up with loads and loads of quarterly submissions. You know, if you've got self-employed electrician, that's the day job, who's also in a partnership with his wife selling honey and craft markets for the weekend because they keep bees, and that's a fun hobby for them, but they do make a profit on that. They rent out their flat that they used to live in before they moved into their house. That's the 3rd one. They've also got a lodger. That's a 4th one. Do I want to throw in the caravan that they bought in Newquay, and that qualifies as an FHL? That's 5 different types of quarterly submission. That's 20 quarterly submissions across a year. That's 4 end of period statements. We haven't talked about end of period statements yet, but that's the equivalent of filing your annual accounts to HMRC just prior to filing your tax return. You know, it doesn't have to be a wildly crazy example to get into a huge number of submissions, or potentially with different deadline dates, because it's all based around the accounting period end. All property types will of course have 5th of April, that's set in stone, but self-employment partnerships easily have different ones. When most UK tax legislation is based on annual tax period base, is MTD quarterly returns relevant? That is a very good question. There's been lots of conversations had between the industry and HMRC and software suppliers and HMRC around basis periods and tax years and accounting periods. As things stand, it is based on the accounting period. If we think about that fundamental requirement, it's about getting people who aren't currently capturing transactions digitally to get them to do so, and we're going to make them submit it quarterly to prove to us that they've done so, and then we're going to give them an estimate of their tax liability based on that so they can better prepare. I don't think HMRC have gone so far in their thinking as to consider about the basis of taxation and tax years, accounting periods versus basis periods, if I'm honest. We've got a statement rather than question. It is almost impossible for the accounts to be prepared on a quarterly basis. No, it's not. They might not necessarily be an accurate reflection of what the final accounts may look like, but it's perfectly possible. So again, this is an interesting one where there's very little guidance out there from HMRC, and they haven't really said what standard of accounts is expected on a quarterly basis. What they have said is that they don't expect tax adjustments to be made on a quarterly basis, even though they are allowing that as an option. So that means, you know, they're not expecting you to consider capital allowances or losses, but they haven't categorically stated that they don't expect you to be adjusting for accruals, prepayments, depreciation, revenue versus capital, all those things that you will do on a year end. Now, in my opinion, if you're giving a month turnaround, and remember this is a quarterly update, it's not a return, it doesn't come with the same, it doesn't come with a declaration that it's best to the knowledge and belief of the taxpayer. It is just a quarterly update of the bookkeeping, which to me means it's perfectly acceptable to be submitting data to a bookkeeping standard. Now, depending on your client base, what you consider to be a reasonable standard of bookkeeping may differ very greatly from what I consider to be a reasonable standard of bookkeeping. I think in either case, the fact that even with a good bookkeeper, the chances of that, you know, the sum of the 4 quarters, as I always refer it to, matching the finalized accounts is going to be so slim that I personally would not be too concerned about how accurate or not those quarterly submissions are, as long as they're reasonable. I would really like greater clarity from HMRC over their expectations. Whenever we talk about it, I don't feel that I've yet spoken to somebody at HMRC that really understands the difference between what a year's worth of bookkeeping gives you and finalized accounts, and the difference between the two, and how huge that difference can be. So I think we really have to make the best of it. I think it'll also come down to what HMRC are doing with this quarterly submitted data. We had a workshop with them very recently where they were talking about what interrogation of that data they would potentially be doing. You know, everything, as much as I hate to admit it, seems to be coming from a good place from HMRC. You know, they're not rubbing their hands with glee at the prospect of being able to open up all these inquiries and on the data they've got. I think there is a genuine desire that if they're getting information in earlier on these businesses and they think there's a risk of tax being underpaid or information being wrong, they want to just highlight that to the taxpayer and say, oh, this looks, are you sure about this? This looks a bit odd. Do you want to take a closer look here? Which I think is absolutely fine. I mean, we kind of build that functionality into our software to give accountants a heads up when something doesn't look quite right or something's in the wrong place. HMR similarly want to prevent those mistakes happening. It's just the execution of it, and I think the lack of understanding about what those figures are really telling you, and not using the data that they've amassed in their system to actually give you an accurate evaluation of whether that think something is genuinely correct or not. What should I tell my customers as what they should do from 6th of April 23? What equipment would be required for them to comply with MTD? This is a good one because this probably brings us on to the technology aspects. You're not going to avoid having to seek a technology solution for yourselves and your client. So I'm a big fan of segmenting clients. I had a handy bit of kit when I was in practice where I could segment my client base in all manner of different ways. It was part of my CRM software that I used, and I'd set up different categories of tags so I can search and sort my client base by whatever mechanism I chose. So for example, whatever bookkeeping system they'd use, I would tag the client with it. So I could then very easily just pull out all my clients that use Xero, all my clients that use QuickBooks, all my clients, God forbid, that use Sage. And I think I'd be doing the same with an MTD perspective. So I'd be identifying all my clients today that do not use a digital form of bookkeeping, so that don't use software or spreadsheets. They're going to be a problem. I'd be tagging all my clients that I only hear from once a year, because they're potentially a problem. They're going to need a service every 3 months. In terms of what your customers will need, what equipment technology they'll need, actually they don't need anything. They just need someone to ensure they are compliant. So they could absolutely outsource it all to you. You could say to them, look, we've got this thing coming. What you're doing at the moment, sending me a pile of records once a year, that can't continue. We need to be filing information at least quarterly. So the minimum you need to do, rather than send me that shoebox once a year, is you need to send it to me every 3 months. I'll take care of all the bookkeeping at my end and all the filing, so that you know that you're compliant and you're good to go. But the relationship has to change from a once a year relationship to a once a quarter one. That's the bare minimum. Now that's going to come at a cost. To go from a client that you're servicing once a year, where you're very quickly knocking up a set of accounts from incomplete records, you're not providing them with a formal set of bookkeeping for them to take away with them. To go from that to doing quarterly bookkeeping and all the filing that's going to take place, there's going to be a cost to that. Not every client is going to want to pay for that full service, so you'll want to be able to give them solutions that those that wish to do it themselves can do it themselves. And I think we will see more and more solutions come onto the market that support those. Certainly cloud bookkeeping solutions you would think would be perfectly capable of doing this come April 23. There aren't so many that are really geared up to property landlords. I think they're the ones that are really at risk, because the majority of them don't see it as a business. They don't see that they've got business transactions to be doing bookkeeping for. They might need a little bit of persuasion, but if the biggest step you can get them to take is get them onto using a spreadsheet of your design, then that's absolutely fine. Spreadsheets are fine under MTD. We'll have solutions that will be able to take that data from the spreadsheet and send it into HMRC. So if that's a bigger step as they can take, that's absolutely fine. Will we be able to use Xero and QuickBooks for this income tax MTD like we're doing for VAT, or we need a compliance software for income tax MTD? That's a very good question. And when you're next speaking to your account manager at Xero QuickBooks, I would definitely suggest that you ask them. I would love to know. As far as Wolters Kluwer are concerned, we already connect to Xero QuickBooks, Sage Online, Sage 50 Desktop's coming very soon, Free Agent, our own bookkeeping product, Twinfield. We connect to multiple cloud bookkeeping products so that we can bring in data, and then that data can be used in tools that we have, either for yourself or your clients. We've got an array of different tools. Our latest one is called FinSit. It's a financial management tool, management and reporting tool. We think that's kind of cool. So it doesn't really matter what software product your clients use, we can bring that data in and do it. And the same will apply for MTD. So even if you would think Xero and QuickBooks do something, but even if they don't, it doesn't matter, because we can pull that data in and you can file it through our system. If you're the type of practice that actually we just want, I'm going to have one person in the office doing all these submissions, I don't want them learning 5 different bookkeeping applications, I just want them filing these quarterly updates. So even if those applications do something themselves, but you wanted one single process in your office that one person can learn, then that's fine too. You'll be able to do that with our system. I assume the client submitting to what was Public Department 1 who have to still use paper returns will be brought into MTD. Public Department 1, love it. Will be brought into MTD. Well, they haven't been brought into electronic filing. So when will we see them brought into MTD? I really don't know. I think legacy self-assessment, as we call it, will carry on concurrently with MTD for quite some time. Not least because under the current proposals, any new business who otherwise didn't have any reason to file a tax return and report under MTD will always have this kind of 2-year period under the current system before they're forced to go into MTD. You would think that HMRC have a plan for when legacy self-assessment will be phased out, and like VAT, legacy VAT, if you like, is going to be phased out, or is being phased out, and should come to an end April 22, because that's when all VAT registered entities should be reporting under MTD for VAT. I wouldn't be surprised if there are some stragglers, some exceptions that carry over a little bit longer, and I think the same will be for self-assessment, and it will be a much longer, slower, more painful transition, I would say, before we see legacy disappear altogether. But I think it is the ambition for every tax return in future to fall under MTD. It's just a case of when. What will be the deadline for everyone's compliance? So deadlines, you're going to potentially have multitudes of deadlines depending how many of these quarterly updates you're having to do. Remember when I said you've got one for each type of property or each business entity, but assuming you've just got a straightforward case of one property landlord or one self-employed business, then the deadline for the quarterly update is monthly. So the quarters are aligned to your accounting period. For property, that's always 5th of April. So your first, if you're in that first tranche, the first 3 months will run from 6th of April to 5th of July. I never like working out the months when it's when you're using a 5th of April. So the period to 5th of July will be your first quarter, and then you will have until 5th of August to make that submission. The deadlines for the final return, the finalization, crystallization. I keep using multiple descriptions for it because HMRC initially called it, and still call it, crystallization, but I felt that was led from their kind of technology side of things. I do hear a lot of people referring it to a finalization. I think that we might see that language change more to finalization at some point. That's the normal 31st of January deadline, and that's the same for that finalization and the end of period statement. I didn't go into massive detail about the end of period statement. Probably worth mentioning that now. So as well as your quarterlies, once you've submitted your 4th quarterly, so you've effectively submitted all the quarters that relate to the accounting period in question, before your finalization, you've got to submit what's called an end of period statement, and that effectively is your final accounts figures. So today, that is the figures that go on the supplementary pages for self-employment or the supplementary pages for land and property. So effectively, you are submitting your supplementary pages prior to the main return itself. Now, how we choose to handle that in our software is a little bit open to us, depending on what you think is the right way. What we're looking at the moment is basically making it kind of part of the same routine. So once you're happy the tax return is all done and dusted and good, you've got everything in there, you've got the final accounts, you've got the final property, everything else that's relevant to that individual, you sent it to the client to approve that all the information is there. Remember, it's not going to be the same tax return form that we have today, but effectively a summary of all the information that's being submitted. If the client's approved it, and then you want it to go into HMRC, we're trying to make that one seamless process, but it has to happen in a certain order as far as HMRC are concerned. And the order that happens is that the end of period statements go in prior to the finalization. So effectively you submit those supplementary pages. Before or after you can submit everything else that accompanies the tax return. So that'd be other income like interest, dividends, any claims and elections you're making. And then you do something called an intent to crystallize, which is basically saying to HMRC, I'm good to go. I think all the data is absolutely fine to be made final. At which point HMRC then send you a calculation back, and they say, okay, we've got all your data. This is your tax bill. Are you happy that that's all correct? You say, yep, that is all correct. My client's confirmed it's correct. This is an interesting one. I, as agent, have confirmed that my client has reviewed that information and confirmed it's correct. And now I'm happy to make that on behalf of my client. So we've got this new concept of agent declarations. We've always had that client declaration at the end of the tax return that's been complete to the best of my knowledge and belief, and that remains under MTD, almost word for word. But HMRC, I think, been a little bit sneaky and put some agent declarations in here too. So there are agent declarations for each end of period statement, those land and property, self-employment supplementary pages, to say that my client has reviewed this information and confirmed it's correct. Now, I would be perfectly comfortable saying I have provided this to my client for them to review, and they've told me they're happy for it to be submitted. I'm a little less comfortable about confirming that my client has indeed reviewed what I've sent them, because unless some of my clients can operate within a microsecond, quite a lot of tax returns, I just email and it comes straight back saying, yep, go send it in, and I know full well they haven't reviewed it. So there's a declaration for end of period statements and an agent declaration for the final tax return, which does sit a little bit uncomfortably with me, I must say, but that's a requirement. If we don't have that in our software, then HMRC won't approve it. If that's you think that's an issue that needs looking at, then do contact HMRC or perhaps the professional bodies and get them to do it on your behalf. I've raised it with everyone that I think has any clout to be raising it on our behalf. Accounting software provides filing advantages and commercial benefits, but does not assist with tax returns quarterly. Too many variables and elements that just do not work for many taxpayers. Joint property rentals. Yeah, there are huge variables, complications that aren't catered for in commercial accounting software as it stands today. There's no doubt about that. Which again, I think as a practice, I think you just have to decide how precious you're going to be over the information that's being submitted and the potential impact, and that really comes down to what HMRC can do with that data as it goes in, as to how much, and I guess the service your clients want, how precious your clients are over how accurate they would want that data to be before it goes in. But yeah, there's still a huge amount of variables that I really don't think have even been looked at from HMRC's perspective. What would be the position of the millions of taxpayers who file their own tax return? Oh, I've lost the question. I think using HMRC's, using HMRC's website, they're going to be in a spot of bother. They are going to have to find an alternative, and that alternative will be third-party software. That will either have to be paid for third-party software, or HMRC and the government is still pushing software suppliers to come up with free solutions for simple cases. I mean, that's just wrought with difficulty. Even if there are enough free solutions from the outset, you know, who's to say whether those software companies will stay in business if they're not able to upsell the premium elements? Then we could easily see that free software disappear, and yeah, there's all kind of problems there. But yeah, as things stand, HMRC will not be building anything themselves to replace the gateway. I do have a bit of a suspicion that if not enough free solutions come forward, then there might be a bit of a U-turn on that, and HMRC will be forced to, and then we'll absolutely see April 23 date disappear. It would take them too long. They wouldn't be able to build it between now and then. But you know, that's certainly something we're monitoring. Will compatible software include bridging software similar to VAT? Absolutely. I think HMRC have long given up the ghost that spreadsheets aren't perfectly acceptable digital records. They are here to remain for VAT. They will be perfectly acceptable for businesses and property landlords as well. We're building tools to be able to file in the same way that we do for VAT, and I'm sure others will as well. Same question there as well. Can we use existing tax software to file quarterly returns for small sole traders such as subcontractors? Existing tax software, if the existing tax software has the ability and is HMRC approved, that's the key aspect of it. What's being submitted is just summary data, so you're not actually submitting all the transactions, and it's perfectly acceptable to use multiple applications as long as the data is digitally linked. Digital links can be always bring up lots of different questions as to what constitutes a digital link or not, but essentially is if you're not manually rekeying data or manually copying and pasting data, therefore there's no manual intervention, then that's absolutely fine. So for a couple of examples, you could simply use multiple spreadsheets. So let's say you've got 4 properties, ordinary properties, nothing complicated, in a property portfolio, and you maintain a spreadsheet for each. And then you have a separate spreadsheet which links to the other 4 and pulls in and amalgamates the data each quarter, and from this spreadsheet you send it to HMRC. That's absolutely fine, as long as you're not copy and pasting or manually typing into the spreadsheet. That's a digital link. That's absolutely fine. If you're using a cloud bookkeeping application that's got plugins and add-ons. So maybe you're a business and you've got I don't know, kind of a separate application that you raise all your sales invoices from, but your expenses are done in a bookkeeping application. Both of those you could export. You could export both lots of data into a spreadsheet and send it in, as long as it is an export and not a manual rekey. You could have the sales software as a plugin to the bookkeeping application and have the data flow in there. As long as that's flowing in, that can go in. If you rekey all your sales invoices into the bookkeeping software and then send it in, that's actually fine too, because your bookkeeping software then comes the source of truth. So there are lots of different options out there, but for whatever piece of that puzzle that makes the final submission, that has to be HMRC approved and have the capability of filing quarterly updates into their system. Is there going to be no self-assessment return? If there's going to be no self-assessment return, who carries out the tax computation? Good question. So as far as accountants are concerned, if you're using commercial software like what we have, we are going to continue to have our own calculation within the software. So our software updates live. Anytime you enter any data into our software, you get a live update of the tax calculation for that particular client. That's nothing to do with HMRC in the sense that they don't see any data. It just sits in our application until you're ready to submit, and that will be the case come MTD as well. We'll continue to provide that calculation. If you're talking about individuals that are filing directly, then again, it depends. That it will come down to the software they use. I'm sure there will be simple solutions out there that won't calculate the tax whatsoever, in which case, and you would think actually bookkeeping applications will probably fall into that tranche. So you'd submit the data to HMRC, and HMRC will send back a calculation. Now that calculation has to be displayed in some way by an application. They may make that accessible via an individual's digital tax account, for example, if an application doesn't do it itself. So, but you would think the application would have some way of displaying it. So I'm sure there'll be solutions out there that don't do the calculation, but it's certainly our intention to always do the computation in our software. Will the quarterly updates be on set quarters, i.e. June, September, December, March, or will it flow with year end? It will flow with year end. Quarters coincide with the accounting period. They'll start on the first day of the accounting period, and they cannot be for a period longer than 3 months. So if you've got a long period or a short period, you're going to have a quarter that isn't exactly 3 months as you meet the year end, but it cannot be more than 3 months. You could make more. You could file monthly, daily if you really wanted to. Quarterly is the minimum requirement. We probably won't support anything more often than quarterly, except for, anything different to quarterly, except to be able to cope with long and short accounting periods. But yeah, it's in line with the accounting period, not the tax year or the calendar year. How will self-employed prove income for mortgage purposes? Good question. The calculation that is returned by HMRC, I assume, would be the equivalent to the SA 302 today, and I'm sure mortgage providers will accept that as the new equivalent of the SA 302. Yeah, same question there. Just do a time check. So we're up to our hour, but I really want to get through as many questions as I can, because I did promise that I'd cover off any more questions. I appreciate some people will have to depart, but we are recording this and we'll make it available. So if you aren't able to stay, then thank you for joining today. But I will just carry on and get through as many of these questions as we can. No more tax return for clients with turnover over 10,000. Yeah, that's a really low threshold. I don't buy in too much to the no more tax return. It's a tax return under another name, as far as I'm concerned. In fact, it's at least 6 tax returns a year under another name. So yeah, I don't buy the demise of the tax return, unfortunately. Does anything use procedure apply to individuals as well as businesses? Actually applies to individuals and partnerships in the first tranche. I think I do have a little slide I can show to say who's in and out. Yeah, so individuals partnerships so unincorporated entities, effectively companies are out. That's April 26 at least. So we're looking at individuals partnerships with a trading business or a property business. That's who is in from the outset. Trusts were in, but they've been chucked out seemingly permanently. No mention of them coming back in as yet. Corporations, as I said, not before April 26, and I assume that will only happen if April 23 goes swimmingly. Limited liability partnerships, again, that's been thrown out to come back in at some point in future. Limited partnerships, they're not very common, but again, thrown out for now. Partnerships that have corporate partners, again, they're deferred for a bit later, and pension schemes. So we're just looking at individuals, or well, effectively individuals with a business, whether that's property or trading, whether they're acting individually or as a partnership. SA 302's come up again. We've covered that one. There will be the equivalent of the SA 302. Whether they still call it the SA 302, probably not, but that will be replaced. When's it going live? April 23. Accounting period commencing on or after 6th of April. Pilot is live now if you've got software that is ready for you to use. Just on the pilot, actually, we have had clients in the pilot before. We're on the HMRC semi-approved list that basically says they've looked at the software. We've had people in the pilot, but we no longer have people in the pilot, and we're not taking any clients into the pilot until April 22. I don't think there's any real benefit to get people in earlier than that. Going in 1 year ahead, I think, gives people plenty of time to get used to the process before it becomes mandatory. And I think there'll just be too many changes, both from our side in how our technology works, and certainly from HMRC's side, how it works. It's we're just not encouraging it before April 22. You're saying the third point, there's no change to current process then. I think that's a reference to the payment deadlines and filing deadlines. No change to those deadlines, certainly. 31st of January is the deadline that is here to stay, and the payment deadlines of July and January also here to stay. How will accountants obtain client approval before submitting final end of year accounts? That's kind of down to us as well. I'll say it's down to us. Yeah, there'll be no tax return, right? So what you're asking the client to do is to confirm the data that would otherwise go in the tax return, that they're happy that that's correct and can go to HMRC. So in our own solutions, we're basically going to create a summary of that information that's easy for both the accountant and the end client to understand, easy for the client to review that information, think, yep, that's right, that's right, that's right, there's nothing missing, that's good to go, you can go ahead and file. Within our application itself, we have to manage those declarations that I mentioned. There are certain steps that have to take place, like things going in a certain order, a tax calculation coming back. We need to verify that tax calculation is correct, and then the final submission. But yeah, if you want to look at it in today's terms, you won't send them the tax return, but you'll send everything else. So if you send a supporting summary of what's on the tax return together with a tax calculation and a covering letter, you can carry on doing the same kind of process. Just that physical PDF tax return won't exist anymore. How to file a tax return if more than one self-employment? Yeah, I think I looked at that from the quarterly perspective. That's 2 lots of 4 quarters. So you can have 8 quarterly submissions. You can have 2 end of period submissions, and then the finalization or crystallization of the tax return itself. So if you've got an individual that has 2 self-employments and nothing else on the tax return, you've got 8 quarterlies and 3 end of year returns, effectively. If clients on PAYE, how would it work? Is there any requirement to report that every 3 months? So any other income that goes on a tax return once HMRC fully developed that aspect, you could report quarterly. Income that HMRC already receive quarterly, if not more often, such as PAYE, should appear in the client's digital tax account anyway. So there shouldn't even be a requirement to report that quarterly. HMRC should already have it, and they should actually make that available for individuals to see. In our software today, we have the functionality that brings in data from the digital tax account, but of course that only happens after the end of the year, and actually takes HMRC up to 6 months to get the data in the right database for it to be presented. Under MTD, there's actually a different set of back-end systems in HMRC that manage that data, so I'd expect that to come in to the digital tax account live each month. So you might see a big improvement in data flowing into a digital tax account, but that'll only be for MTD clients. You won't be able to use that same data for clients that are still under the old or existing legacy system. Someone with only dividend income, will it just be one end of year submission? Yeah, if you've only got, so if you haven't got a business, you've only got dividend income, there is no requirement for you to come under MTD. It'll be normal tax return, unless you voluntarily choose to enter. Right now you can't, you can only voluntarily enter if you've got a self-employment, property income, or both, and no other sources of income. So yeah, dividend income only, you'll be under legacy self-assessment for some time yet. Quarters based on trading year or calendar quarters, I think we've covered that one. That's your trading accounting period. Property is always 5th of April, self-employment, whatever year end that individual or partnership is chosen. What happens if a partner at the 30th of April year end also has a buy-to-let property which is on 5th of April basis? When do they join MTD? Okay, this is a good one. So remember, it's from your first accounting period beginning on or after 6th of April 23, and you can look at the self-employment and the property independently. If either one of them causes you to be in MTD, then you're in MTD. So if we look at the 23 year, that first tranche, the 30th of April year end, your first commencement date, if you like, the first start of your accounting period will be 1st of April 23, but that's the 24/5 tax year. So you'd be filing quarterly quite soon after the beginning of 23, but not doing your annual, because those accounts are going to fall within the 24/25 tax year until much later. But if you've also got property income, that's going to see you in from 6th of April 23 to 5th of April 24. Now, if the property income in the current year, because remember we're looking 2 years back, 21-22, if that exceeds £10,000 and including your self-employment income to 30th of April 21, which falls in the 21-22 tax year, then you will be in MTD from April 23 for your end of year 23-24, because whatever causes you to be in, you are in for everything. So you can't be in for property and reporting property quarterly. If you are in based on the property, but you also have self-employment income, then you are reporting both. It's an all or nothing. So from 23-24, you'd be reporting both and the end of year in MTD. If this example didn't have property and it was just a 30th of April year end, then it wouldn't be until the year end, wouldn't be until 24-25 tax year. You'd still have your 23-24 tax return under legacy, but you would start filing those quarterly updates for your first quarter. Pretty tricky, those 30th of April year ends. Is there going to be extended soft landing period like happened with MTD for VAT? I would think so. I think they would repeat that. So we had the soft landing period that was in relation to digital links and the fact that digital links were allowed to continue. I think that ceased not too long ago, April 21. So I would expect that to be the same. Whether we kind of allow it in our solutions, I mean, with our VAT solution, we never allowed manual entry, copying, pasting into our solution at all. But of course, there was nothing preventing individuals doing that within a spreadsheet and then uploading it into our system. But don't recall anything being mentioned on it recently, but I would expect so. Also, if that relates to things like penalties and things, again, I would expect a soft touch. I think they said we'll have a soft touch approach to penalties. The proposed penalty system is a kind of points-based system. So however many submissions you are late for, whether that's quarterly, end of period, finalisation, you amass a certain number of points, and if you hit a certain number of points within a time frame, then there'll be a penalty. That's still, I don't think that's hit legislation yet. That's what's currently being proposed. Do MTD for SA quarterly returns have to be submitted as well as MTD VAT returns for the same business? Yes, quite probably, and not necessarily with the same deadline. If your VAT periods aren't coterminous with your accounting period, you will have staggered submissions. They're pretty much independent. So whether you have to do MTD for VAT or not is independent of the decision whether you're in MTD for self-assessment or not. So you could absolutely be doing both and not necessarily to the same quarter ends. I think if you've got a client like that, then you might want to consider aligning VAT periods with the accounting period, so you've got the same deadline that you're monitoring. I think that would be quite sensible. I know in practice I was a little bit ambivalent. I think initially, when I was a big fan of 30th April year ends as well, I was also a big fan of not having VAT periods coterminous, so that it wasn't quite so easy for HMRC to tie up the revenue in the accounts to some of the VAT quarters. But I think over time I've been a little bit less keen on that and aligned them for ease of admin. Are 31st of April and 5th of April treated separately or the same for tax year calculation? Separately. So if you are self-employed and a 31st of March year end, you effectively are going to enter MTD 1 year later than a 5th of April year end, because your first period commencing on or after 6th of April 23 is actually 1st of April 24. So I have been sort of doubting the idea of switching all 5th of April year ends for individuals and partnerships to 31st of March to push it back another year. Will a trust with rental property come into this area of MTD? Nope. Up until fairly recently, that was the case, but trusts have now been removed, so trusts are safe for now. Another trust one. Is the 10K trigger the average of 2 years, or is it 10K in any of those 2 years? You look at it on a year-by-year basis, so it's 10K for that single year. So the first pertinent year is the current year, 21-22, and you just look at the figure for that year. If next year, if you're above this year, and next year income drops, you are still in for MTD in 23. It would only be in 24 that again you can look back 2 years, see that it's dropped, and then have the option to come out. So it's just based on a single year, 2 years prior. If someone's self-employed and rental, is MTD based on turnover of them combined? Yes, it is. So if you've got somebody who has a small part-time employment and perhaps rents out a room, both of which have revenue below 10,000 but combined is above, then yes, they will be in MTD. Once you've signed up for MTD and your turnover drops down, I think I just covered that point. Yes, you have the option of then coming out. It is optional, you can stay in. I suspect the default will be that you stay in unless you request HMRC remove you from MTD. But yes, if it drops, but you're still applying that kind of 2 year 2-year stagger. So if it drops, you've still probably got at least the next year to submit before you can come out, unless they make a change to that one. This is all as things stand today. I should point out that we have had some very early, very early draft legislation to review, which some of this information is based on, but that has been worked on considerably, and I believe we'll be receiving an update to that draft in the not too distant future. So there may be some changes when that comes out, but we can certainly let people know if that has given us any new insight from the early draft that we've seen. Can individuals file their own returns via MTD? They'd have to get an MTD ID, or will they have to employ an accountant to do extra expense? They don't have to employ an accountant, but they'd have to use functional compatible software, which may be free depending on their particular circumstances. If they're a simple case, I suspect if they're not employing an accountant, they're going to have to pay for software if they want to do it themselves from here on in, unless it's particularly simple. What do you mean by MTD's optional voluntary? Two things, I guess. HMRC Pilot is open now, so it's optional voluntary. If somebody wanted to enter now, if they had the software provider that will allow them to do it now. And the other thing is that if your income drops below £10,000 2 tax years later, you can choose to drop out, but you can voluntarily go in. Similarly, once it goes live in April 23, even if your revenue is below the 10,000, then you can voluntarily join MTD rather than file legacy self-assessment returns. I'm not expecting a huge take up. I think I've heard people suggest that, you know what, once we're in, if 75% of our clients are going to be in MTD, then let's just put everybody in. I don't see a huge appetite for that, to be honest, but it's there as an option. MTD threshold terminology used income, taxable profit, or sales stroke turnover. It's turnover that's pertinent. So whatever the turnover figure is on your supplementary page of the tax return, effectively, for the current tax year, that's the figure. Assuming that figure has been input correctly, that's the figure HMRC will use to determine whether you've exceeded 10,000 for this current tax year. How will this work for self-employed foster carers? Oh, I'm glad this question came up because I did promise to cover this one. So for people that don't know, foster carers have very specific tax rules covering their circumstances, and quite often there are quite generous allowances applied to foster carers on the income that they receive from a tax perspective, which I think is only fair, which means that actually on the supplementary pages of a tax return, it's quite often zero or small figures that go into those pages. There's been no specific mention of exemptions for foster carers, but everything that's being done in MTD is pretty much driven from the data that's provided today on those supplementary pages. So if the figures that go on the supplementary self-employed page for the current year is less than 10,000 in combination with any property income that that individual might have, then they won't fall within MTD anyway. If the figure is above 10,000 in that turnover box, then as things stand, unless HMRC create an exemption between now and April 23, then they will. For the 10K turnover, if this is a joint property business, do you look at the individual share or the turnover as a whole? Individuals share, certainly for property. There have been some questions about what you look at from a partnership perspective. I've had mixed responses from HMRC when I first asked. It's the partnership itself. If that's over 10,000, then that would compel each partner. I think the CIOT asked exactly the same question of HMRC a week later and got the opposite response and said it was the partnership's share. of the turnover, but I'm not sure I've ever had to calculate a partner's share of turnover, and I'm not entirely sure I'd want to look at that one for partners that have anything but the most basic split. So yeah, the jury might be out on that. There are lots of unanswered questions when it comes to partnerships. We'll also have employed clients who have a 5th of April trading year end have to do a return on the same quarters, i.e. first one June 23. Yes, absolutely, unless you optionally choose to file more often, which I'm sure there won't be a great deal of appetite for. So yes, so technically 5th of July, 6th of April to 5th of July would be the first quarter, and that will be every self-employed business with a 5th of April year end, and every property business that you've got. That will be the first one, first deadline, 5th of August. Can you explain how things work for clients with joint property? Does each have to deal with MTD for their income proportions? Yep, I think we've covered that one. So it's just if your share is above the 10,000. So if property is your only source, and you don't own the property 50-50, if one person shows above 10k and the others is below, then one will be in MTD, the other will be in legacy self-assessment. That might be different for partnerships trades. As I said before, there are still things to be clarified. So what I was first told was by HMRC is that if the partnership's above 10k, that's every partner. We've since been told that you look at individual partners' share of turnover, so you could have some partners that fall within and some that fall without, but certainly that's the case for property. Is it gross rental income or net income? It's gross. Sole traders, is it gross income or net income? It's gross. So profit is irrelevant for this. It's purely on your turnover. Is it going to apply for trusts? Nope. They have been pulled out indefinitely, so I don't expect to see trusts brought in for quite some time. Is bridging software an option? Absolutely. Spreadsheets are perfectly fine. We're building bridging software to cover that, so absolutely fine to get people using spreadsheets. Individuals who are non-resident for tax purposes, they're a problem, I have to say. Yeah, they're a problem, and it hasn't been addressed as yet for HMRC, so I'm not sure there's a great deal I can add to that one. One of the bugbears, or one of the issues we have with MTD, is that HMRC have chosen the NI number as the effectively the unique reference number for an individual under MTD. That's a couple of problems. Firstly, they only accept the standard format from an NI number, 2 letters, 6 numbers, and A, B, C, or D as a letter. There are plenty of people, non-residents, people here temporarily, that have NI numbers in a different format. There are people that don't have NI numbers, and partnerships themselves don't have an NI number. I'm really unsure why they didn't use the UTR as the unique identifier. But yeah, there are lots of circumstances that haven't been addressed yet by HMRC, which makes me think actually there will be categories of individuals excluded come April 23 because they haven't been adequately dealt with. I wouldn't be too surprised if we see partnerships slip back. That might be a bit bold right now, but there are lots of things about partnerships that haven't been resolved, and certainly lots of things around residency that haven't been resolved. So we may see the net narrow as we get to April 23. Can you confirm that the annual update is 1, which combines total from all quarterly returns for everything? Kind of. So it's 1 split into 3. So your end of period statement has to go in first, which is your final accounts for the self-employment or the property. Can all be done like this kind of one process is what we're trying to achieve with our software, but in order of steps. That has to go in, as does everything else, which forms part of your tax return for that year. HMRC send back the calculation once you've said to them, I've got everything, I'm ready to file live. you confirm you're happy with the calculation and you crystallize. You basically say, yeah, there you go, it's all in. So it's one process with some steps that we're trying to minimize as much as possible, but it is submitting those supplementary pages separately and then the whole tax return altogether. It's a little bit odd. If they have other income, dividends, interest, and assume if they have other income, dividends, interest, etc., another return is needed. Also, how do all sources and indemnity come together to work out the tax due? So it's not it's not another return that's needed as such, just a different mechanism that we use to submit the information. So the end of period statement is a kind of formal submission with the agent declaration. The other information that surrounds it, actually, you can submit that whenever you like, before you get to that final sign off and crystallization. I'm a little bit uncomfortable about submitting effectively draft data to HMRC before the client signed it off. So personally, I probably wouldn't submit anything until I'm absolutely ready and the client signed everything off and I'm good to do it all in one go. But I think HMRC are anticipating it coming in a bit more piecemeal as you work through the tax return. I just really don't think that's particularly realistic. And that would be really for the software to determine how that operates. But we will provide the functionality that once you're ready for data to go in, data will go in. We have to accept a tax return back from HMRC and display it to you. And then the final crystallization can go in, which is the equivalent of filing the signed tax return today. Do you imagine the tax year to change 1st of April, 31st of March to make it easier? Yeah, I would change every 5th of April year end I've got to 31st of March. It's really not going to make much difference. I'm not even sure you have to work out the overlap relief if you're switching from 5th of April to 31st of March, but if you do, that's got to be easier than doing 4 quarterly updates for a year. So I'd certainly take any opportunity to defer people going into MTD. Is reporting done on a cash basis or from business documents? If you qualify to use the cash basis, you can use the cash basis. So that has turnover thresholds for both self-employment and property. So you choose whether you're reporting under an accruals basis or a cash basis. Just the same as you do on I think both supplementary pages, you mark whether you've used cash or accruals. Would you recommend, I think everyone knows how keen I am on changing the year end now. I was even really exploring a way of changing the property year ends, but ran into a problem with them specifically legislating against it. If the quarterly submissions are substantially different to the 5th submission because no tax adjustments have been made in the quarterly, would this variance flag on HMR system and potentially result in an inquiry? That is exactly what we've been having discussions with HMRC about right now, because I keep saying that these quarters are not going to realistically reflect a quarter of the year-end results. HMRC keep coming back to me and saying, yes, we understand there'll be seasonality in certain types of business, and I keep saying it's not the seasonality that's a problem, it's the lack of grasping what the quality of bookkeeping data is. And it's not just about the quality of bookkeeping data, right? It's about preparing accounts on an accruals basis, determining revenue versus capital, all the things we do at the end of a year. I really don't think HMRC understand them. So they are basically, they're working on how they're going to treat this data. They are saying to us that they want to explore, rather than just opening inquiries left, right and centre, they want to basically generate flags or indicators to say, look, there's something here that we think might be an issue. We want to make sure that you're aware of it and you can address it. Now, if that flag comes through to me as the accountant and I look at it and think, well, okay, there's 10K of, they've bought a car and it's gone into travel expenses. Fine, I'm aware of that. Maybe I could choose to resubmit that quarter. I probably wouldn't. But if a client's been submitting their own quarterly submissions and then a flag comes through saying, oh, there's no income being reported for the past 3 quarters, then I would probably say to the client, oh, I think something might have gone wrong with your software here. You've not reported any income. So yeah, there's no doubt they're going to want to use this data in some way, shape or form. I think they just don't understand that the differences are going to be so common that actually to drill down and identify the clients where there actually is a problem, I think they're underestimating how effectively they'll be able to do that. Seasonal variations. Oh, that was a good time to talk about seasonal variations where in some quarters there'll be no trading. How will this be computed? Incorrectly is how that will be computed. So if we're looking at HMRC's predictive calculation or analysing the data that they've got, yeah, if your first quarter happens to be a heavy income quarter, then the predictive calculation is going to come back saying there's going to be potentially a huge tax liability, which I don't really want my clients to see or be telling them, because I know that that's not going to happen. If your first quarter happens to be a very low revenue quarter and HMRC predict a very small tax liability and let the end client know, again, I know that's not going to be the case. So yeah, there are going to be problems with seasonality that they say they're aware of and they're going to factor in. I guess if the business type is down as a farmer, they'll have some algorithm that says this is going to change on a quarterly basis. Can you simply enter provisional figures quarterly? You can do what you like, but that's not going to meet the requirement of. It's probably not going to meet the requirement of capturing the transactions digitally, nor maintain the digital link between those transactions and what it is you're submitting. I have had people suggest to me, a little bit tongue-in-cheek, that they will just take last year's figures divided by 4 and submit that 4 times. I'm not entirely sure how long people would get away with that. And again, HMRC haven't really given any guidance as to what they would do in that circumstance. Obviously, you're not going to be falling under the normal penalty system because you will have met the deadlines. You will have used functionally compatible software to submit the information. And if we're in a soft landing period for digital links, they can't really nab you on not being digitally linked to the underlying transactions. But clearly that doesn't meet the requirement of capturing the transactions that are digitally. Looking at an example of sole traders in budget, my understanding is that each type of income will require separate software. Is this still the case? It depends, I guess. You certainly don't want to be amalgamating a business with a property because you can't submit them in a single submission. You've got to submit your property separately. You've got to submit your self-employment separately. I suppose if you're using an online bookkeeping package and you wanted to use the same package for both self-employment and property, you'd probably set up as 2 accounts with that software. So you've got one account that's your property business, one account that's your self-employment business, just as you would if you've got somebody who's self-employed and also in a partnership. You wouldn't amalgamate those income and expense figures into the same one. So effectively using the same application but different accounts within it. You could use multiple spreadsheets and use the same bridging software to make each submission, even though they are separate submissions. So I think there are different options, but the actual submission bit could very well be in the same piece for software, just distinctly separate submission for each business type. Let's just have another little time check. Oh, it's good to see there's so many people still on the call. So I'm going not talking to myself. Fabulous. Will charities be expected to do MTD as well? You know what, I was thinking about this earlier. Charities, I don't believe, have been specifically mentioned. So it's whether they fall under any of the existing categories. I would think a lot of charities would fall under the definition of a trust, so they'd certainly be excluded. Any incorporated charities certainly excluded. Any charities that can a charity be an LP? I'm not entirely sure. Perhaps. It's a very good question. Very good question. I would hope so. I would hope so. Certainly, we responded to the consultation from HMRC on the rollout of corporation MTD for corporation tax, and we specifically asked what types do you think of entity do you think should be excluded, and we were very adamant that we didn't feel charities should be forced to come in the initial tranche. But yeah, I couldn't say for sure. I'd have to look into that one. If the actual details are not available for a particular quarter, should it be marked as estimated, or is that not necessary? Is it adjusted in the final submission? I don't think there is any option to be submitting estimated figures. Don't recall that as an option. So I guess when you're at the point, if you don't have figures, then you're going to be late rather than filing an estimated. If you do have figures but you know they're not complete, then I guess it's a decision as to whether you feel they're complete enough. I would, the fact that you can resubmit any quarter, if I really wasn't comfortable with the figures, then perhaps just to avoid a point racking up, I'd probably submit what I had, and then once I had a bit more information, I was happy, I'd resubmit with the extra information just to avoid racking up a potential penalty point. But I don't believe there is any option of estimated, certainly on the quarterly basis. I don't know about the final submission, because we do have that estimated option in today's tax return, and I expect that would be replicated under MTD, because pretty much everything that goes in the tax return today is replicated under MTD. So I think from the final point of view, yeah, I would expect that to be there. Can you please provide an overview of Walter's Clue solution and timescale when this is likely to be available? Yes, so our approach, for anybody that doesn't know, we've obviously got a lot of Walter's Clue customers here, and also a lot of people on the call that aren't necessary customers of our software. So we have a rich on-premise suite of solutions today, desktop software, and we're also building our future suite of cloud solutions that will eventually, once we've reached feature parity in the cloud suite, replace the desktop products that we've got today. In the interim, we've got CCH OneClick, which is our hybrid cloud solution, so that we can give all our existing customers the power of our cloud tools and functionality that we build, so they can carry on using our existing products before our cloud suite is ready. In terms of MTD, we're building that all in the cloud currently. We're going to be launching our cloud suite in the first half of next year, and that will tie in nicely for people who want to join the HMRC MTD pilot from April 22. We are also going to make that the MTD functionality available in CCH OneClick for our existing CCH personal tax users, to be able to do all the MTD filing whilst retaining CCH personal tax for the end of year routine. So how we see it working is that if you're doing all your clients today in CCH personal tax, that can continue whether they're under MTD or not. Any of the processes that are different under MTD, such as the quarterly updates, the end of period statements, the crystallization, that will be done within CCH one-click. Anything that can be done in CCH Personal Tax today, such as collating all the data, generating the tax calculation, that can all carry on working in CCH Personal Tax, and you'll just go into a separate MTD filing flow within CCH one-click for the finalization or crystallization. On the quarterly side of things, we're developing a range of tools to support the different client types that you have. So we'll have a tool, a bridging tool for clients that use spreadsheets that will be available during the pilot period for you to try out and use. As I mentioned before, we've already got the ability to bring in data from multiple cloud bookkeeping solutions. So again, that will feed into the MTD filing capability, and that will similarly be available to people under the pilot. We're developing tools to look at bank transaction data because we're already FCA approved or FSA approved, I don't know which way around it is now, to use bank transactional data within our software. We already do so with live bank feeds within Twinfield, our bookkeeping application. And again, we're looking at how we can do that to bring in bank transactional data and use that as the digital source of information to then feed into our MTD filing capability. Now, bank transactional data isn't really suitable for producing accruals basis set of accounts. There's a lot more that goes into a set of accounts than just the bank transaction data. But as I've said before, I think that what information is required to bookkeeping standard for quarterly updates, I think that could certainly be met for a lot of businesses, or particularly property businesses, just from bank transactional data, if they can be persuaded to use a separate bank account for those transactions. Obviously, we'll have to build in some ability to quickly and easily remove transactions that aren't anything to do with the business, but that's certainly one that we're exploring and hope to bring to you before April 23 as well. Is HMRC going to require us to link the customer's accountancy software to their MTD account, and will it allow HMRC to have a nosy into it as and when without the customer's knowledge? No is the short answer, because I mean, absolutely HMRC won't be able to look into the accountancy software. The only information that is being submitted to HMRC is summary information. So there'll be no transactional data submitted. I think from the outset, and we've had discussions with HMRC on this, particularly from the VAT perspective, is that there is a desire certainly for HMRC to get their hands on the transactional data, and it was always suggested there'd be an option to submit full transactional data to HMRC at some point if clients or accountants wanted it. I don't want it, but certainly as things stand, it's just summary information. So if you look at the supplementary pages today for self-employment or land and property, the fields that are there that break down the turnover and the various different expense codes, that is all HMRC will have. I suppose their P&L, not any individual transactions. Another question about the millions, I think 5 or 6 million taxpayers use the gateway. Yep, they have a problem. HMRC won't be continuing their website tax return service. Absolutely. It's quite interesting, actually. We've got so many questions to get through. I can see where these questions, how far behind I am in the questions compared to when I was talking about these items, but it's yeah, it's good we've had so many questions. Will CCH be providing workflows for us to keep track? Yeah, absolutely. We've got a great workflow engine in within CCH Central. We want people to be able to utilize that. Yeah, so certainly we're looking at the reporting side of things as well. How can, like particularly at the end of this current tax year, how can we allow you to easily identify all your self-employed, partnership, property clients that have income in the current tax year over 10,000, so that you know those will absolutely be the ones from April 23. We have some reports available at the moment to help you identify self-employed partnership and property businesses with turnover above that 10,000, but we do want to do more on that reporting side to make things easier. If we're looking at 21-22 for income loans, will this include SEISS grants 4 and 5? Sorry if you covered this earlier. It depends where you put those grants on the supplementary page. There's a separate box, isn't there, for SEISS grants, so they won't form part of turnover, I think. Basically, if they rightly go into that turnover box, then they are included within turnover for 21-22. I can't 100% remember offhand whether there's a separate box or if I'm confusing it with the corporation tax one. I'm sure you're probably more aware than me which box those go into. But yeah, if that's in the turnover box, that will be included. Small self-employed clients, turnover 40k, net profit fairly static, even manual systems. How acceptable would it be to use best estimates each quarter for MTD reporting purposes and then finalise the 5th quarter? It won't be acceptable at all, is the short answer. It's the key requirement. Bookkeeping, record keeping should be in a digital format, and then that should link through to what's being submitted to HMRC. I don't know what the penalties would be for not doing that. I wonder what those good exam fodder, isn't it? What are the penalties for not keeping sufficient records to support the information on the tax return at the moment? Would HMRC rely on those existing provisions? I'm not sure. I think we'll have perhaps a bit more clarity at some point about what will happen to people that just blatantly choose not to fulfill that core requirement. Does the 10k threshold include dividends PAYE? Nope, just business income, self-employment partnership or property. Will all non-MTD income sources be supported at crystallisation? Can individuals be in a position where they need to file a tax return and crystallise under MTD? It's anticipated that every non-MTD income source, i.e. non-business income source, will be supported at crystallisation. I am sure that HMRC won't get their back-end systems in place to accept all of them. Well, I don't know. They might do. If we think it's going to start in April 23, but the first end of year returns are going to be 23, 24, so they're not going to be filed at the earliest 6th of April 24. Maybe they'll get there in time. I have no doubt there'll be a list of cases that will be exempt from MTD because the systems won't be in place to be able to file a certain type of income or election or whatever it might be. Why HMRC cannot allow taxpayer to file quarterly, very similar to final one, so that any adjustment remaining to be dealt with 5th and final return. I think it's probably more a statement than a question. I mean, this is kind of live reporting, isn't it? When you're doing these quarterly updates, you're not going to know what the final position is going to look like. I certainly think when you get to the final position, then you look back, then there'll be some businesses that are fairly predictable and static throughout the period, others that will vary wildly. If you're going to be able to say if we have rental income, is it just rental income that needs quarterly reporting to begin with? Nope, you're either in or you're out. If one of those compels you to be an MTD for that tax year, then you are reporting quarterly for both for the accounting period that relates to that tax year, effectively. If there's no end of year SA100 for MTD clients, how do we report investment income, pension income, etc.? Yep, they're all reported digitally, separately from the business income, but hopefully as seamlessly and as in a single operation as we are able to do so within our software and still meet HMRC's criteria. How do we produce a calculation to take into account multiple items? That really will be down to the software. Our software will certainly factor everything into the calculation. Nothing will be factored into HMRC's calculation until it's submitted to them. So the quarterly stuff will be submitted to them and they'll update their predictive calculation. You can optionally submit other income at any point prior to final crystallization, but I don't expect many people will. So HMRC's calculation, if you like, will only be updated and correct once you make that final submission. Okay, we've still got lots of people on the call. I'm going to call it a day at 1 o'clock, and we've still got lots of unanswered questions to go. So I'll do a couple more, but I think what we will do is get a Q&A document out to all the attendees along with the recording of the video. I think the people that did have to leave after an hour will be quite surprised that we've gone on for 2 hours and that may be quite a lot of video to watch through to get all the answers. So we will distribute a Q&A document after this as well to make things a little bit easier. But if I just answer a couple more before we draw a line there. With Walters Kluwer software updates include the reporting capability to identify the clients that fall into MTD for income tax. Will it be a template report? Yeah, that's something we're absolutely working on. We've got some reports in the system at the moment that need a little bit of manipulation to get everybody covered, because these were originally created when the thresholds were looking a bit different, or we were anticipating them to be the VAT threshold of 85,000. So it can be done at the moment with a little bit of manipulation, but we do want to create something a bit more template that's at the click of a button for everybody, particularly for the current tax year, and because this is a pertinent one. If push comes to shove, can we submit estimated quarterly returns and mark it as such like we can on tax returns currently? Yeah, I think I covered that one off earlier. I've not seen any provision for that quarterly, but I would expect that still to be there annually. Yeah, I don't think that'd be an option quarterly. For property, with the usual rule that 31st of March treated as 5th of April apply? Yes, I don't believe there's any change to that as a result of the MTD filing mechanism. If a client has self-employed income greater than 10k, but also dividend income, will this need to be included in the MTD quarterly return or just the SE? Quarterly is just the business income unless you voluntarily choose to submit anything else. So no, it's just the business income or property income that needs to be reported. It's another foster carers one. I think I covered that off earlier. Nothing has been specifically mentioned, but I would expect it to follow the figure that you currently enter in as turnover. That will apply. What will HMRC do with taxpayers who are filing their own SA 100 but falls under MTD? They will be compelled to acquire third-party software. If there's free software available that supports their circumstances, then they can use that. If not, they will have to pay for their own software or pay for professional support. When does the end of period statement need to be submitted to avoid any penalty? End of period, that's a good one actually. End of period statement has exactly the same filing deadline as the crystallization, so 31st of January for the end of period statement. So if you're doing a 30th of April year end, for example, that you're filing quite early ahead of the quite early in the tax year of the tax return that you submitted, it's still the same 31st of January deadline. You could submit it early if you want. If you finalise the accounts, there's no reason why you couldn't, but I'd probably do it all at the same time. I'll end on this question. If the payment dates remain the same, what is the point of filing quarterly? That is a very good question. I could probably even remove the first phrase of that question. What is the point of filing quarterly? I mean, the payment date's absolutely going to remain the same, I would say, for the foreseeable future. HMRC aren't speaking very loudly about wanting to have payments happen more regularly than January or July, but I think it's inevitable that they will want that to happen. They're certainly going to be encouraging people to make voluntary payments in light of these predictive calculations they're going to be sending out. So it'll be interesting to see what traction that gains in terms of moving payment dates to be quarterly rather than the payment on account system that we have today. I think that's an inevitability, but certainly not from the start, and I probably wouldn't expect to see that in the near future, but I'm sure HMRC will get more vocal. Thanks to the 181 participants that have made it this far. I'm glad you're engaged enough to stay through a very long webinar. Hopefully I got most of your questions answered there. I know there are still quite a few coming in that haven't been able to answer in the time, but as I say, we'll get a copy of the video out to everybody. It might take me a while to get all the answers into a Q&A document, but we shall do our very best to get that out to everybody as well. So thank you very much for joining me. Enjoy the rest of your day, and we'll see you on the next webinar. Thank you.